Good afternoon. My name is Jorge Newbery. I am the founder and CEO of American Homeowner Preservation, and what we do is we crowdfund the purchase of defaulted mortgages from banks, and we buy these at big discounts. There's still a lot of foreclosures. There's still a lot of underwater mortgages. There's probably 10 million in the country right now. So we buy what we can, and then we offer sustainable solutions to keep the families in their homes if that's what they want to do. If they don't want to stay, we offer cash incentives for deeds in lieu. If nothing works in terms of consensual solutions, we end up foreclosing on the properties. Now, real estate crowdfunding, we operated as a hedge fund from 2011 till 2013. Real estate crowdfunding I was completely unfamiliar with and really existed very nominally at that point. One night I was at home on Angel List, and I saw a listing for Realty Mogul. And so I clicked through and I saw the site, and from operating a hedge fund to seeing Realty Mogul raising capital online, my first thought was this has to be illegal. But I said, well, let me see what's really going on here. So I registered, and the minimum investment was $5,000, and this was their first offering online. So I said, let me invest $5,000, let me get copies of these documents, and let me take them to my attorney and see what he thinks. So I made the investment, and I took the documents to my attorney and said, hey, how can we do something like this? And Realty Mogul had everything pretty well set up. Money's just like today. Most of the platforms, you sign your documents electronically, you initiate an ACH from your bank account, and each month you get a distribution back. But my attorney was intrigued, and he researched it and said, hey, this might work. And meanwhile, I was hearing about other platforms coming aboard, and there was another one called Realty Shares. So they had their first offering. It was a single-family rental property in Mississippi. They needed to raise $30,000, and they had raised $25,000, so they only needed $5,000 to go. And so I said, well, let me try this. So I put another $5,000, and I still received $35 a month from that investment. And but this was, Realty Shares had just gotten going, and so they initiated the investment, registered, but their ACH still wasn't working. So the founder, Nav, called and said, hey, can you just wire the money? So we wired the money, and within a couple of months, he had ACH and everything else going. So I'm intrigued. And eventually we started our crowdfunding platform, which is American Homeowner Preservation. Investors can go online and invest in our company via the internet. And what I think is most exciting about it is the reach. We have investors, sometimes we come in the morning and, hey, there's 2 new investors that invested last night. We've never talked to them by phone. And operating a hedge fund, you always had to either know, investors had to be friends or family, typical 506D offering, friends or family or people you were introduced to. You couldn't market. So now people are going online, we never talked to them, and they were investing. Remarkable to me. But now it's happening more and more commonly. So today, I think there's over almost 100 real estate crowdfunding platforms, and most of these have come into existence over the last 24 months, if not even less, probably 18 months. And I think that's astounding growth, and we have some of those platform operators here. And I think, like Nav from Realty Shares, that first offering was still trying to get his ACH going, and he did, and they've grown and become very successful. The challenges in the industry, although there's a huge amount of promise, and I think some of that's being fulfilled right now, there's also a lot of challenges. And I think the goal of today's session, or one of the goals, is to discuss some of those challenges, what's being done to address those, and what more challenges we can look forward to. So I'll ask that maybe each of you introduce yourselves and just brief background on your platform, and let's keep moving.
Okay. Richard McCay. Our platform is Tieback Realty Finance. We've been live for about 2 months. Our approach is a little bit different. When you get into business, you have to take inventory of yourself and kind of understand what your strengths are vis-a-vis your competition. And really, our strength is value creation in real estate, which means making things. And the other thing that we had gotten good at was doing a structured debt product that was funding large-scale house flippers. So those are the 2 things that we're concentrating on our platform. And we're really not targeting the investor that I hear most of these folks targeting. We're really looking for the real estate investor who's a purposeful, smaller institution who has allocations they haven't been able to place. And I'll get into some of these numbers later, but it's a quite large number, and Cornell University surveys this every year. It's in the, probably right now there's $700 billion sitting on balance sheets that's looking for real estate that hasn't found a home. And we think that these platforms, with the automation they bring and the reach, will allow these investors, once they get comfortable with it, to make investments, no matter where they sit on the globe.
Hi, my name is Amy. I'm General Counsel of Patch of Land. By General Counsel, that means everything that comes out of my mouth today is going to inevitably have an attorney spin to it, so I apologize in advance. I think a lot of the people in this room seem like more seasoned people in the industry, so I'll just give you the quick 30 seconds. Patch of Land, we do real estate debt crowdfunding. The reason why we're different from other real estate crowdfunding portals is A, we pre-fund everything. That means if you are a real estate developer and you have this distressed property, short sale, probate, whatever it is, and it needs to close in 4 days, as long as you get us all the documents, we will get you there, because we use either a credit facility or our own balance sheet to pre-fund and to pre-fund and close the deal ourselves. So that way you, the developer, can go ahead and start going over to the property, getting your contractors in, and start the development project already, so that you can, finish the project earlier, pay back the investors, and move on to your next deals. So one is pre-funding. The second one is we were the first, we might still, I'm not sure, be the only real estate crowdfunding portal that specializes in debt. That means we do not do equity, and all of our debt deals are standardized based on some sort of formula. So you don't see crazy kickers or this or that. That means that, after you've been on the Patch of Land portal for a little while, it should be as simple as e-commerce. You already know what you're getting, because you know which details and what sections to look over. And the last part of it is we are 100% 506C. We do not do 506B. I have, legal reasons why I do not think that is a wise avenue to take for the long term. If you guys want to talk about it, I'm happy to talk about it, but that's pretty much it in a nutshell. And we actually just announced our Series A raise a month or two ago, came in at $23.6 million, so we're very happy and growing very fast.
What's the valuation?
That is confidential information, and I am their attorney. I'm not allowed to disclose it.
Well, my name is Mark Robertson. I'm the founder of CrowdDD.com, and our goal for the site is to be the Yelp of the crowdfunding industry, equity crowdfunding, so that we want users to be able to discover, rate, and review crowdfunding platforms and investments. And a little background, about 15 months ago I discovered AngelList and started doing some investments, and from that I discovered a few other platforms, and I've done about 55 crowdfunding investments since then. And during that period I discovered that there's really no place to go for an independent third-party place where you can share your knowledge and your due diligence to try to figure out which investments are the best, which platforms are the best. And so the genesis for the site is a place where people can go and independently see which sites are the best and which investments are the best. And that's the site.
Hi, I am Mei Zhang. We are a real estate crowdfunding that's targeting on Chinese market, Chinese investors to invest in real estate deals in the U.S. Mostly we're right now targeting on New York City area, and we're going to expand across the country. But we are targeting on Chinese overseas investment markets, as well as institutions in China, to help them do investment in U.S. market. So the reason for our business to start is because right now there is a huge market for Chinese investors to come here do investment, and the real estate is the most comfortable investment tool that they are interested in, especially for the large retail in Chinese investors, and as well as a lot of Chinese institutions. So we feel that real estate is a great opportunity for them. Right now, the property market in China is cooling down, so a lot of money are looking for ways to invest with good return, and the U.S. market is actually a good fit for them, and they are very interested in. So our platform just launched about 2 weeks ago, and we have gone through a lot of challenges to do 506B and escrow service, ACH setup that people are just talking about. So, but with the help of our attorney Doug, and we're looking for escrow service and all that, we're about there to do our business. So we are going to do both equity and debt offerings for the real estate development, mostly in commercial real estate area. So right now we're targeting on condo buildings, some offices, as well as other hotel deals. We are targeting on Chinese investors, mostly in China, but also domestically in the U.S. We are also talking to angels right now for investment crowdfunding our platform as well. So that's why I'm here. I'm actually co-called by the organizer to be here on the stage today.
That's interesting. I hadn't heard about it. What's the name of your site?
iCrossFund.
iCross, C-R-O-S-S?
Yeah. www.icrossfund.com.
Okay. What's interesting. Now let me ask, Amy, you started it. So the 506B versus 506C. Let's not spend too much time, but I know we operate under 506C, and I'll tell you, it is a hassle to get investors to accredit. Some investors, they're accredited, they have the money, and they're just saying, I'm not giving your tax returns, I'm not going to have my CPA write a letter. If you want the money, I'll give it to you. If not, I'm going to go somewhere else. And we do have that, and it's unfortunate. On the other hand, a lot of investors will go ahead and provide a CPA letter, or even sometimes their tax returns and other documentation. But we feel a little bit of a disadvantage against Realty Shares and Realty Mogul, where investors can just check a box and say, I'm accredited, and that's a lot easier. So Amy, tell us the legal point.
So when it comes to 506B, inevitably with any platform, whether you're doing B or C, there's always going to be a learning curve, right? And when it comes to 506C, you do have to take reasonable steps to verify that they are an accredited investor. The SEC has safe harbor guidelines, as well as the principles-based method. My job as general counsel is I need to keep everyone out of jail. Out of orange, we don't look good in orange. I don't look good in orange. And so I don't see us as one of those fly-by-night platforms that's like, oh, we're going to do a lot in 1 or 2 years and then sell ourselves out. And so we're really thinking long-term about this. So there is a learning curve, but I don't think it is insurmountable for 506C. And if you do run a portal and you don't know how to verify an investor, that's okay. There are service providers out there. VerifyInvestor.com, for example, they do a great job, and they actually have an attorney sign every verification for you so that it strictly falls in safe harbor. Now, that being said, there are a lot of portals out there operating under 506B, and I'm sure what we found, and I'm sure you found this as well, when you actually, even if you make an investor click a bunch of boxes and say, I'm accredited, this is how I'm accredited, even if you made them type out a letter that says, I am accredited, inevitably when it comes to the verification point where you ask them for their documents, you're actually going to find that a lot of investors are not accredited. It was just too easy to click that box, right? Or they might be almost there, or I don't know. They
think they'll be there in a few months.
Yes. Or they're like, what if I borrow money from my friend and put it in my bank account? Like, I don't want to hear this. The problem, though, I think with 506 operating an online portal as 506B is that 506B has been around for a long time, and it was never, the regulators never contemplated that 506B would be used in this manner. Now, you heard people earlier today talking about, there's that cooling off period, or, we can actually get to know them. Regardless, people are going to lie to you. And I think when push comes to shove, maybe 5 or 10 years down the line, if the SEC does ever decide to actually investigate or find someone or shut someone down because of this reason, that's the reason why Patch of Land has consciously made that decision to not put ourselves out there in that way. I try to, at least when it comes to securities law, I try to make sure that we're super 100% compliant.
Appreciate that. Richard, go ahead.
Yeah, I think the worst thing is 3 years down the line, the person you accepted his self-certification decides that, hey, you know what? I'm going to sue you because you didn't verify, and I'm not certified, and that's a possibility. So really,
But is that different between C and B?
yeah, well, yes. On B, you just check the box, right? And C, you need to be verified.
And you actually gather documentation
Yeah.
and have it reviewed by a third party or broker dealer.
Somewhat specious too, because someone could fabricate a balance sheet.
True.
And elevate asset levels to say, I've got a $5 million net worth. How much verification other than what's on the balance sheet? So B or C.
Well, I mean, look, if their CPA is willing to misrepresent or their lawyer, I think you're okay.
One of the things that we found is that there are providers in the market who will actually transfer the liability in the verification process. So find a verifier who assumes the legal liability of that verification.
Right.
And then make sure that they've actually have the E&O insurance to cover the deal flow that they're verifying. And I know of one group that's actually carrying the E&O to do that, but that transfers the legal liability, which makes it a lot easier to underwrite.
But that's not the issue, because it doesn't matter if you have a non-accredited investor. That doesn't make your offering non-exempt. If you're wrong, like in 506C, and you're wrong, it doesn't matter.
Right.
Okay, as long as you've taken reasonable steps. What matters is the general solicitation. That's the issue in the 506B deals, that an unhappy investor turns around and says, you were generally soliciting. And that is going to be a powerful argument, as you and I discussed offline, Amy, but because people are much more carefree about the whole 506B situation than they should be, way more than they should be. And so that's the claim from the disgruntled investor, that you engaged in an unregistered public offering.
And so I think you see portals who, some portals may be 100% 506B. Okay, that's one issue. But now you're also starting to see portals where they will put a 506C general solicitation deal right next to a 506B or a Reg A. They'll put a 506B or Reg A right next to a 506B, and they'll do a lot of hype around the C so that they can, go out, do advertising, whatever, build up a lot of hype. But really, their intention is to draw in more investors so that they can actually get the 506B deals done. And that's a problem.
Well, I think that's actually the challenge we are facing, a dilemma we're facing because of general solicitation. We want to do general solicitation, but to do that, we have to follow 506B. However, for a small startup like us, we're not be able to burden with the verification process. So that's why, Amy, you just mentioned about the service, outside service. That's something we can think about. Yeah.
From an investor standpoint, I know a lot of investors will choose the Bs, so A, they don't have to go through the process. But there's a lot of people who complain that I wish you were a B because I'm not really accredited, but I will check the box and invest anyway. And they'll say, if you were C, I'd invest with you. So from our portals or websites point of view, we can discuss and rate 506Cs because they're solicited, but 506B investments, we can't even put up. And so for investors' protection and for outside verification, I'd rather see them all 506Cs personally.
I don't want to sound like a Debbie Downer. I think, people who are doing safe harbor, great, that's fantastic. And I think there are definitely industry leaders and industry laggers. To date, we have followed the safe harbor method. I don't know that we'll stick to that forever, right? We may move to a principles-based approach, which may be easier, right? But it's interesting. We actually have a lot of investors who come back and they're like, "You're the most, strict platform. I don't know why you require a credit report." And we're like, "Well, are you investing with another 506B platform or C platform?" They're like, "It's 506C, but their process is different. They don't require a credit report for net worth." And we're like, I think there still needs to be a lot of education training in how to properly verify an investor's accredited status. So I think that's something the industry could still improve in.
Just one other comment. Well, let's not forget, these platforms that are indulging in this practice are getting funded left and right by venture capitalists who simply don't seem to care about it, because there's a number of models out there say this is okay, you can clean it up later, like Lending Club and Prosper and what was Sean Fanning's company. So they get funded, they get a lot of traction, and then they fix it later. That may be what we're going to see.
And maybe they get a class action lawsuit.
Okay. So if everyone's making money, then they'll probably simply, it'll probably be easy. If the market turns, then it'll probably turn into a class
But if
action
something
lawsuit.
goes bad, what do you have? Restitution and treble damages? I don't know. Anyway.
So broker-dealers, there's been a number of broker-dealers. I mean, I think when all this started, there were no broker-dealers associated with real estate crowdfunding platforms. Now you've seen a number of broker-dealers who have come into the space and are trying to carve out a significant amount of market share. Are any of you affiliated or considering affiliation? And if so, why or why not?
Well, I mean, if you have a lawyer, they probably advise you it's a safe route,
It's certainly prudent.
Yeah.
The broker-dealer, working with a broker-dealer certainly allows you much more freedom in the type of deals that you do. Patch of Land specifically is not affiliated with a broker-dealer. Usually the thumb test is if you're doing equity, you're probably going to need a broker-dealer, right? If you're doing debt, it just depends on how you do it. And with Patch of Land, the way we've structured our offerings, and I've literally gone to every single securities attorney I could find about this, and the consensus, at least for Patch of Land, is that we fall under the 3A4-1 issuer exemption, which is another topic. I know Mark wrote a whole blog article about this, so.
Yeah, I mean, we don't offering, so we don't have to worry about it.
We are actually thinking to be affiliated with a broker-dealer for our equity offerings. The reason for that, behind that consideration, is because of the commission that we would like to charge. If we are not affiliated with a broker-dealer, we are not allowed to collect the commission fees. So that's the suggestion we got from our attorney. So that's a different business model. We're thinking down the road we might get on that path. Right now we're doing our real estate debt and equity offerings to investors, but working with broker-dealer to help sell our securities is something else that we are thinking down the road.
I have a question. If you are affiliated with a broker-dealer, I assume you have to have someone on staff that's licensed and have their license hanging with that broker-dealer in order to receive the commission. Otherwise, you wouldn't be able to do it, right?
That's right. Anybody that interfaces with the investor needs to be
Yeah.
licensed.
But, in California, there's an exclusion. If a real estate broker, you can sell real estate securities without needing a broker-dealer. I don't know if any other states allow that.
Is that debt? Is that specifically debt, or is
No,
that?
it's equity, debt. It's a real estate. Yeah.
Well, like WealthForge is a platform that you can plug into that's sort of like instant BD for your own platform, right?
Your team needs to get licensed, or at least your
So-
salespeople needs to be licensed with us.
So
But if your salesperson is just a computer,
Well, there's still always human follow-up. So we actually did affiliate with WealthForge, and we have 2 registered reps. They have Series 7 and Series 63, and that allows us actually to pay them commissions. You know, another, I guess, benefit is now you can have commission sales people who interface with investors and can earn a commission if they sell a lot of securities. And I think for compliance reasons, it's been helpful. Certainly, I realize there's a lot of platforms that it's not required, but I think that for us, that's been a big benefit.
Well, if you're operating as a investment advisor, you probably don't need the broker-dealer, right?
No, don't go down that path.
Well, I asked the question, didn't I? So I can get a free
Good thing we
legal
have
advice.
attorneys in the room.
Free legal advice.
And why do you think that?
That is a very dangerous misconception that broker-dealer and investment advisor are interchangeable. Investment advisors give investment advice, brokers do transactions. So the reason that there is that misconception in the industry is because in the 2 no action letters from 2013 to Funders Club and Angel List, they recited both of those companies that they were already venture capital advisors. That is just something that they were already. They recite in the no action letter. And the SEC, the way no action letters, they don't give you any reasoning. They just come back and say, we agree that in this situation for those 2 companies, they did not have to be broker-dealers. Some people have left the conclusion, oh, that means if you're an investment advisor, you don't have to be a broker-dealer, but that is absolutely not true.
Well, I thought the test was, I'm learning a lot of stuff here. Because right now, most our deals are principled, so we don't face that right now. But I thought that if you were getting compensated on a success basis was the key. And if you're making a asset management fee and a promote, you still have to be a broker-dealer.
Yeah, if you're getting it as a commission for having raised money. So, again, one of the facts in those no action letters is that they got carries, and they argued, hey, a carry is just a normal way of being compensated when you're an investment advisor in the venture capital industry, because that's a true statement. But if you try to translate that to a different industry, for example, real estate, and you say to your salespeople raising money, I'll tell you what, you go raise $2 million, and in exchange for you raising $2 million, we will give you a 10% promote. That is a commission.
That is a commission. But what I'm thinking about is a situation where it's actually an employee of the firm. And you know, the real estate model is very similar. You know, for a principal in a deal, you get a management fee and a promote. So if your employees are not being compensated based on money raised, but as they provide other functions in the business, I thought that was the gist. I think you're talking about Scott Anderson's article, I believe.
Well, Scott has pushed the envelope a little bit, I think, because Fund America.
Yeah, I know.
Anyway, we're wearing this
All right,
out.
we're back. Yeah, you should probably pay for that advice. So, and how much is it? No. Institutional, no, there's been a lot of institutional interest, both in the equity of real estate crowdfunding platforms and starting to be in the offerings. And this is, you see it with Prosper and Lending Club. It's a huge amount of institutional capital infusion, and you're starting to see it on some of the real estate crowdfunding platforms as well. And I think that will present some new challenges. And have any of you had yet overtures or interest or actually investments from institutions? Go ahead.
Well, since that's been our target, and really getting worried that was the right strategy, because you know, you need a lot of staying power. But on the other hand, we don't have a huge burn rate, and we have other business. But just recently, there was a big private equity firm, an 80 billion plus type entity controlling crowdfund sites, and contacted us and said, you know, we're interested in the lending you do in the distressed resi space, and we're interested in crowdfunding. Can we have a meeting? So I'll report back if it happens, it's a huge transaction that we're talking about, and changes us from a Newbery do well to, really we probably have more money at play than any other platform. But that's our strategy. It's a bit risky from a point of view of our personal costs.
Amy, I know you've had equity in the company. Just congratulations, by the way.
Thank you.
And you're, how about offerings?
So when it comes to institutional investors, and I'm trying to think about how I can phrase this with keeping my clients' confidentiality. We do actively talk and have agreements with institutional investors. More keep coming in every single day. We have not yet sold one to an institutional investor, although to be very frank, that might be changing at this very second. But that I think, at least on my side, that's all I can say. Sorry. Confidentiality clauses.
Meg?
Ha, good try.
Now, what happens if another 08 comes in terms of massive? I mean, there's been, although real estate in general, people have been quite optimistic over the last couple of years, and I think gotten quite comfortable. There's, 08 isn't that far back, and there is this over-optimism often leads to bad results. And if something were to suddenly occur and the credit markets were to be challenged, how do you expect your platforms would fare? And what have you looked forward to the point where maybe that's integrated into your underwriting or anything to that nature?
And so this is a question we actually get a lot, and that's why we do a lot of things the way we do in our business. First of all, when it comes to the underlying loan, it's not just a first lien position that we take. We do pledge agreements, we do personal guarantees. Sometimes if there's not enough behind it, we'll make them cross-collateralize with another property. We make, we'll make them do spousal consents. It is a lot. We do try to make sure we're pretty protected, and then we are about to hopefully very soon unveil a new legal structure that we hope will protect our investors even more. So that's on the offering structure side. I would say this actually feeds back into the institutional investor argument, right? There's a reason why I think Prosper and Lending Club and all these other platforms, they don't go 100% institutional. There is value in having that retail investor base, be it 5% or 100% or 20%, whatever it might be. The retail investor base, I think, after you build up their trust and they understand you, they understand how you operate, you've talked to them on the phone enough times, and after you've done many transactions with them, they begin to trust you. And so I think the answer is if and when another 08 comes, the retail investors are really, I think, the key to flexibility. Maybe we might not have, real estate debt. Maybe we might turn to another product offering. Oh, and on the structure side, that's also why we structure our deals to be so short-term, 12-month notes, right? Because it's a lot easier to say, is the next real estate downturn coming in 12 months? Or if I do an equity investment, is it going to come in 3 to 5 years? Who knows what the climate's going to be? Maybe it might turn into a 7 or 10-year investment. And so that's a little bit behind that.
Meg, you stated that you're getting a lot of interest from Chinese investors because the market is cooling off in China. Mm-hmm. How do you, your associates, and you believe Chinese investors feel about the immediate future of American real estate?
I think they are looking for good investment opportunities, mostly in big metropolitan area in the U.S. market. So right now, like California, New York City, Boston, those are the areas they are interested in the real estate development projects because they want to come here to buy the condos once the units are done. So we are seeing a lot of investors are like that. So they want to invest in our projects, and at the end of the project completion, they want to buy the unit. So that's one way we try to hedge our risk down the road in case the market is cooling down. And the other way we look at this is to go through our selective due diligence process to selectively select the projects in terms of developers, in terms of location, in terms of the loan to cost ratios and things like that. My background coming from a banking underwriting experience with the commercial real estate and the commercial C&I loans. So that's some of the consideration that we're thinking to selectively select projects that we feel comfortable to put them on the platform before we go out to look for investors.
And from an investor standpoint, I think that a potential downturn, we look at crowdfunding as a way to diversify and reduce the risk because you can diversify, you can use smaller amounts of money, you can go different geographies, you can do different asset classes, you can do debt versus equity, and if you look at your platforms and do your research on what the platforms, or not the platforms, but what the sponsors have done in the past, do the research on that, and diversify enough that there will come some downturns, but you can limit your downside.
Well, on this downside, we're really having that discussion right now on this trade we're proposing because we're proposing a high leverage structured debt trade, and of course, when you get high leverage, people remember 2008 and their hair catches on fire. So it's we think we've structured around it, but it's there. But, if you're in the short-term lending business, you can respond pretty quickly. If you're long real estate equity, you got to just ride it out.
Investor acquisition, at this point, all the real estate crowdfunding platforms are targeting, with the exception of the Reg A's, are targeting accredited investors. These are roughly 4 to 5% of the population. So there's a limited number, certainly a limited number have been exposed to real estate crowdfunding at that point. What are your best strategies or what are your challenges right now to acquiring more investors and exposing your product to more investors?
Well, this is where I get to bring out all the numbers and people's eyes are going to roll. I'm a recovering CPA, so you'll have to forgive me. But the numbers that we were talking about earlier for there's only about 15 million people in the world that have a net worth of more than $1 million. So it's a thin pool, and a lot of those folks have their money managed. So hence we're focusing on the folks that are purposeful investors who manage the money. But the next group, this Reg A Plus group, is pretty large. There are folks with $100,000 to $1 million globally. There's 366 million of those people. So the reach of these platforms allows you to get there. And the size of the real estate they currently hold is $8.4 trillion and expected to increase $420 billion this year. So you cannot deny that class of investor in your strategy, I don't think.
Does that mean that you intend to do Reg A offerings, or?
Absolutely. We think that's the way to take in accrediteds that are individual investors.
Because it's almost as easy as checking a box.
Yeah. Well, it's easier because but there's obviously some reporting requirements, but I'm a CPA, so I don't think they're that onerous as everyone keeps making them out to be.
Just remember the suitability requirements. So in terms of investor acquisition, I know my answer will not satisfy people here who are trying to build their own portals, but we have this magician. Her name is Adapia Diarico, and she just makes magical things happen. I don't know how she does it, but she does it.
She's a lot of social media. I know Adapia, and she's everywhere. But that's not our business, so that's
We haven't done huge marketing in the China market right now. That's a plan for us to go China in the next next month to start marketing. So what we are planning to communicate with a lot of channels in China through media, through social network, and a lot of trade shows that we're going to there. Right now, we're thinking we just need to build up our reputation to have a couple of successful deals up there on the platform, and that will be easier for us to do marketing back in China. So we just hook up with the guy from World Bank that there is a crowdfunding conference in July in Beijing, so we're gonna definitely be there. So a lot of house related trade shows will be hosted in China as well, and Real Deal is gonna have one in Shanghai in September. So those are the events we're gonna go. We also have offices actually in Shanghai and Beijing already, so we have people on the ground to do all kinds of marketing activities for us, although we're based here.
Well, you do have an advantage of being a niche, going to China, being an American-based, you are based here,
Right.
and you're offering American real estate. I would think that would be advantageous to you. So.
That's right, yeah.
We want to partner with her.
Let's talk about it.
Yeah, you often hear about American platforms owned by Americans saying, hey, we want to reach out to Chinese investors, but not really knowing the path. So, and I'll tell you, on the note of acquiring investors, when we first started American Homeowner Preservation, we thought, hey, general solicitation, we can advertise, this is going to be great, investors will come flooding in. And so we bought ads online, banner ads and whatnot, and there were a lot of clicks, which usually pay-per-click, which isn't good because most of them didn't convert to investors. So you're saying this isn't working that well, despite the fact that you can generally solicit, it isn't really generating investors. Then I was interviewed on a local WBEZ, which is the Chicago NPR affiliate, and I had a 10-minute interview, and our phone started ringing off the hook with investors saying, I like what you're doing, I want to participate, how can I invest? And these were accredited and unaccredited, but it was a enlightenment for us because some of those accredited investors invested significant sums, but what we learned was that from that experience was not to buy advertising. We need to spread the word through media. Any exposure we get in the media is generally rewards us with people who come online, register, share stories, and that engagement has been extremely valuable. Later on, I write for the Huffington Post periodically, and I'll tell you our biggest, haven't invested yet, but our biggest institutional investor that's going through due diligence right now came from a Huffington Post article. They said, hey, they called up, said, I read your article, I went to your site, I was impressed, let's talk about investing. And that cost us really nothing, but it exposed us to a lot of investors, so that's been a great experience.
Does your platform qualify for CRA from a bank?
We have searched how to do that, and a lot of our offerings are in CRA neighborhoods, so it would be an interesting component if we could marry that. We just haven't figured out, so if anyone has any expertise on how to do that, we'd be very interested. All right, absolutely, I appreciate that. See, when you talk at places, that's where you also make connections.
Well, I'd like to share, we write articles on our site as well, and the article with the most shares and the most discussion was an article about my actual returns from investments. I don't think people realize that they see projected 10%, projected 12%, but when they actually get to read about actual results after a year and a half of a project is when they get excited. So I think once the industry matures a little bit and people can start talking about their actual results, it will grow more. Because I belong to a country club, and there's 300 or 400 accredited investors there. I'm the only person who's ever invested crowdfunding. They don't even know anything about it. I discuss it with them. It goes over their head. So there's a tremendous learning curve that needs to take hold in the industry.
I want to talk to you.
Well, let me go down the line and maybe share, I've touched on some challenges that I think some of the real estate crowdfunding platforms are facing. Share some of the ones that maybe we haven't touched on yet.
Well, I don't know if I can think of any. I just think our challenges have been a little bit more difficult because we're trying to go whale hunting, and it takes it's a white knuckle ride, and hopefully we can land the whale we have, or we might have to pivot and do smaller deals.
I think the challenge is always depends on who you ask, right? For me, obviously, it's always going to be compliance. There's so many laws that you have to comply with. From a broader company standpoint, I think right now it's really a land grab for good borrowers. Good borrowers are hard to find, and I think that's going to make or break which company succeeds.
Well, over the past year, I've looked at probably 500 investments, and during that time with research and sharing it with other people, there's 4 or 5 instances where we found not outright fraud, but they didn't disclose everything. And there's one platform in particular had a offering, and it took 3 weeks to shame them into taking it down. But I want to read 2 or 3 sentences from their offering and let you see what you think about it. Our structure can handle it's a real estate fix and flip fund. And it says you can earn a whopping 37 to 59% a year. Our structure can handle a near 50% loss of value and still maintain the same dividend. And each member spot has earned, I can now share with you Fund 24. Each member spot was paid a whopping 125%, plus each spot received a bonus of $409,000. Please note that I will stop accepting requests once I reach 500 investors. And this offering was up for 3 weeks. I finally had to go to LinkedIn and shame the platform owner and said, you cannot let this go. And finally they took it down. But there's still some shenanigans and potential fraud out there that investors need to watch out for.
I'm concerned
Well-
there were 23 before that.
Well, actually, it's a platform that became a software as a service, and they just paid to have them listed. But groundbreakers.com.
Really?
Oh yeah.
And I actually copied and pasted the listing, so that's 6-month participation is 18 to 29% ROI, but participants can walk away with a whopping 36 to 58% annual rate of return.
If you use the term whopping in your auto.
So there's 99% of the industry is doing it right, but there's still some bad apples out there.
And just to be clear about, go ahead.
We're currently doing bad actor checks on people who applied to use us for a platform, and 1 out of 10 are coming bad.
Wow.
So right out of the gate. So there's clearly has to be diligence in the industry to maintain the standard. It's really easy as a service provider to say yes to everybody, and I'm sure there's going to be portals that want to put up anything, and it's really going to take diligence in the market so that Mark and others will be able to continue to say there isn't fraud in the industry.
Richard says that.
Yeah. I want Richard to be able to say that next year too.
You know, we've done a lot of lending in that space, and there are some deals that people do get 100% returns because it's possible. Consistently, not likely.
And in defense of Groundbreaker's a white label provider. They simply, and they hopefully have learned from this experience, but you can simply engage them to build a site for you. They use their white label, so it can be done very, very rapidly, and then they aggregate all their white label operators onto their site, and I don't think there's any curation involved, and that maybe they didn't expect an offering like that to show up. Obviously it did, so but they don't purport to do any curation. So I guess not to fully defend, but
no, but it took a while to communicate.
yeah, that is unfortunate.
But if the market goes down 50% and you can still get your dividends, it's a pretty good investment.
Yeah.
Yeah, you deprived a lot of people of opportunity.
Meg?
I would agree with Amy that compliance is a challenge since we're on this path and we're new to the crowdfunding law regulations. So we have been through that, and it's a long path for us. Besides that, I would say that finding good real estate projects will be a challenge down the road. Once we have our investment base built up, we will have to look for good investment real estate deals for them. One way to do that is to find a combination of different property types, either rentals or development, or a combination of those would attract our investors' interest on the platform. So I would assume that we will get to a point where we're going to have a bottleneck of finding good projects.
Yeah, if you're disciplined, I would expect that would be. And I guess one concern would be that some platforms, in order to compete and stay operational, would maybe lose some of their discipline, which is probably what led to the '08 crisis.
Well, what concerns me, it sounds so self-serving, that's why I'm reluctant to say it, but there's just a lot of folks who have started platforms have zero real estate experience. And therefore, their due diligence filters in the beginning can't be that good. But they've gotten through it because as they grow and get capital, they're able to beef up their staff. So that's actually the good news here, is it actually has worked. And I was skeptical.
In an up market, it's easy to work. We can probably, any questions from the audience?
I have a question. You had indicated that your Chinese investors were looking for good returns. I wonder if you could quantify what in their minds is a good return.
It really depends on the type. So for that offering, I could tell you that right now the return on the Chinese market for investment products is paying in a range of 7 to 8%, and that you can get a lot of investors who are interested in. So our thinking is that if we can offer them higher than that and help them diversify their assets, because right now their assets are all in China, and they know they need to diversify that with different overseas assets. So if we can offer higher than that, they will be interested in, yeah.
I have to ask you this, so I'll ask a question.
Yeah.
506B, you're soliciting in China. Are you doing what kind of compliance do you have to do with Chinese securities laws?
Yeah, we actually, in China, we follow Regulation S for overseas investors. And as Xiaofeng just mentioned, that in China, actually the rules are just coming up for crowdfunding. So there is some draft coming up for Chinese crowdfunding market. Since we're issuing the securities here, we need to follow SEC rules here, and then we're gonna have a license to sell our securities in Chinese market.
Any other questions? Final thought from each of you?
I have one question.
Go ahead.
What about tax?
Yeah, the tax is a complicated issue. We're talking to our attorney right now. So for some deals, it looks that an offshore entity needs to set up to help them with their tax issues. If not, then we have to withhold their tax here in the U.S. Yeah. Okay.
I think
This is how he lures in the client.
they're thinking about changing the withholding for FERPTA for pension funds only.
That actually, does anyone do you accept international investors as long as we're on that?
We're very actively recruiting Chinese investors right now, and on 2 very large transactions. So,
And Amy?
It's an idea that we've punted around. We punt this idea around like every couple of months. We're actually set up to accept foreign investors, but the reason we haven't to date is just because of it just takes, we think, that much extra work in terms of all the accounting and all of that kind of stuff.
Sounds like you have a lawyer on staff.
And a good CFO.
All right. Well, I want to appreciate you hearing our panel, and hopefully you learned something and enjoyed it.